Hello everyone, and welcome to today's Trading the US Open live here with the live trade room, which is your home of consistent profitable trading. You have all the access to all the tools that you need to be consistently profitable here at the live trade room, from a wealth of education through to all the trading tools like the risk management software that we can calculate trade size effectively, through to our daily live trade rooms, and also our signal service and our daily support. So we really try to put everything we can in place to give you, I suppose, a really solid grounding in trading these financial markets. For more information, do just simply go to our website, www.thelivetraderoom.com, for more information, and we'll be happy to speak to you as well through the website if you need. If you want to get a comprehensive education in trading these markets, certainly do have a good look at us if you can. Okay, so without further ado, what I'll do first is if we could just bring up our risk warning. Of course, it is important to take note of the risks involved in trading the financial markets. That is actually what gives us our ability to be consistently profitable over the medium and longer term, is our ability to manage risk effectively, and that is what trading is largely about for the vast majority of profitable traders. You do have your boom and bust type traders, of course. They go out and almost gamble and take risks, and the exchange for high risk taking is obviously, significant returns, like what we've seen and what we've heard about over the last few weeks with your social trading, and all your retail traders piling in, going against your institutions and your hedge funds who are looking to short sell certain stocks. So there's situations like these in these markets all the time. But it is a high risk form of trading. Same situation with trading Bitcoin. Of course, the moves are huge, but they're huge to the upside, and they're also huge to the downside as well. So you want to weigh that up and see if that is a market that you are comfortable trading. Some people will be comfortable trading it. Many people won't be. It's far too volatile for us in terms of trading the market. It is a viable option for a long-term investment. But the risks, like I said, are very, very high indeed. Okay, so with this in mind, what I'll do is I'll bring up our trading platform currently up onto screen. And these are the markets we were looking at yesterday. We'll do a little sort of review really in terms of what we saw yesterday in yesterday's trading conditions. Then we'll have a quick look at the news. We want to understand whether there's any very significant market moving events that we'll have to take on board when we trade these financial markets over the course of the trading session and for the remainder of the day. So we'll have a look at the fundamental data points, and then we will discuss our trade plan from last night's live trade room, and we'll put that up there for you as well, and go through those. So just taking a little step back, looking at yesterday's trading conditions, and if I look at each one of these, so we're broadly speaking, we are bullish the pound. We have been for a couple of days now. Yesterday's trading, we saw a nice impulsive move higher, and as you can see, we've experienced a little bit of a sort of a 50-60% pullback off the highs. So our bias is still very much to the upside. We're still trading inside yesterday's highs and lows. There's a marginal sort of bearish bias to it over the course of today, but that very well may change. There's only a few pips in it. So we're still ultimately bullish the pound, not necessarily against the US dollar, but we do want to have a bit of a better understanding in terms of what's happening with this dollar. So we can still sort of monitor this type of trade. Last night we were looking at some unique opportunities, or opportunities that have been in the pipeline now for a few days. So that is the pound dollar. Let's look at the euro pound now. So we were looking for this market to if I just bring this up just a little bit. So we were looking for this market. We could see that the 87.60 level is a strong level of support in this market. So that, we've seen that over a couple of days. And what we saw yesterday during the day was this little breakout trade to the downside, and we were able to get into it yesterday morning. However, as soon as prices broke below that 87.60, we've drifted sideways for the majority of the trading day, and now you get your customary kind of pullback. So by no means is it game over to the downside. Our still bias is still very much to the downside. It is why we have a technical stop loss above this strong level of resistance up here at the 87.95 level. So we still expect this lower. We still expect the pound to broadly strengthen, not just today or tomorrow, but over the coming weeks. And the major reason for that is the way that the UK economy seems to be bouncing back from the COVID restrictions, the way they've rolled out the vaccines, and it's an economy that's likely to bounce back pretty much before everyone else. So that's why ultimately we're slightly more medium-term bullish, the British pound, short and medium-term bullishness, although we're experiencing a little bit of softening in that pound move as we stand. So not really seeing the movements that we were anticipating just yet. It's a similar analysis really for the pound yen. We were looking for this market to actually continue its move higher, but instead it's actually rolled over to the downside. But relatively little sort of action really from the 144.98 down to the 144.55. So we're talking about 50 pip range really since yesterday. So that's nothing, and that for the pound yen, it's a very volatile market. So that is virtually there's virtually nothing going on there from a volatility perspective just yet. But it doesn't necessarily mean that we can't prime ourselves for that potential buy trade that's likely to. Well, certainly if you look at this price action that's come before it, our bias is clearly to the upside, and it might just be, we might just need to be a little bit patient at this point. Sorry, bear with me a second. So what I have is I've obviously got our I've got two earpieces in. I've got one with our streaming service, which is our it's our Squawk, so we get market updates, and we also have I can obviously listen to this broadcast as well. So apologies if I'm a bit distracted on occasion, if I'm sort of listening to some news coming through. I will, of course, inform you of any useful news update as they unfold. And we'll have a look at the news now in just a second. And we will be making this Squawk available to our traders, for those traders that are trading daily timeframes, intraday timeframes, that you can access fairly low cost Squawk as well, which hopefully will be coming online next week. So so we might be we'll make a couple of amendments to that perhaps in just a moment, so that's fine. Just looking at the pound, we've seen very little volatility really over the last 2 trading days. Little bit of sort of mild softening. However, we're seeing a little bit of short-term softening, but nothing of any major concern. It's just clearly taking a little bit of a pause before we get that next move higher. So it's just a case of just putting it on the back burner short term. The gold market is an interesting one. This is one of our trades from last night that we discussed in detail. So over the last 4 days, we've seen some gold buying in this market. And what I'll do is I'll just put that level in here. Let me put one more. So these purple levels on the screen are levels of support resistance, and we want to see how often the market interacts and engages and bounces off those specific levels. The more we see that, the more relevance it has to our trading decisions. So last 4 days we've bounced off the low. It's just technically a pullback for us, so it's not that our bias is shifting now to the upside. Far from it. In fact, we're likely to see another move lower if we're going to look at the technicals behind this trade. And the level we're looking at is the 1833. So that still stacks up, and you can see why we look at these and why we refer to trades as high probability trades, because they are. It is important to stack the odds in your favor when you trade these financial markets, and we use daily highs and daily lows as a bit of a trigger for us to pull the trigger, get in, get out of those trades. And the very simple reason for that is that if we're making a decision inside a previous daily highs and lows, it can react like we've seen in the gold market today. It can bounce off it and fail to follow through. So one of the key aspects to the way that we trade the financial markets is to be consistent in our decision making, and we often use daily highs and daily lows to be able to do that. And it's almost the confirmation that we need to actually pull the trigger. We don't just need to look at markets and just make decisions in terms of this is what we think will happen. We want to see the markets follow through as per our expectations. So that's why we can wait quite patiently for this 1833 level to break. If we look at it just on the hourly time frame, you can see that there we go. We can see that we got close to breaking it during the Asian session and last night, but actually failing to close below that level. So until that happens, we are comfortable. Okay, so we've got US jobless claims out at 130, which we'll have a look at now in just a moment. The gold market is very much moving sideways, so we want to be mindful of the market conditions before we get into a trade. If we're buying or selling, we want to know what's the market condition. And an example like this, over the last 2 days, it is consolidating. It's just moving sideways. That's all that happens. Yep, so this is the gold market. So again, it's that little break below the 1833 is what we're looking for. So we're going to leave this chart up as things currently stand. Review the trades that we've planned yesterday primarily, and then we can look for some additional opportunities if and when they come our way. An important part of trading is if you plan for certain opportunities in these markets, to actually execute your plan is what you've put your time and effort into preparing for, and then we're just allowing the markets to come to us rather than us go chasing all sorts of different market moves to the upside, to the downside, and going up, down, left, right, all the rest of it. All the difficulties that unfortunately a lot of new and inexperienced traders will unfortunately experience. I experienced it myself as a retail trader when I was starting out, and it's a very, very common experience in this environment. So if we can just sort of plan for the opportunities, and again we do it through there's membership packages through the live trade room. If you do want to take your trading to the next level, it is very affordable. And what you'll experience from us as well is that with our trading brokerages, we don't benefit financially from your trading in any way, shape or form. So the benefit of that, there's no conflict of interest with us. So the only sort of financial commitment with us at the live trade room is a monthly fee to actually learn how to trade these markets live every day, with the support, with the trading tools, with over 50 hours of education, with daily live trade rooms, with our signal service. It's a combined package really that you'll experience live, interactive, daily trading and support. So we'll hopefully give you the best chance at being successful in this environment. Okay, so we've had a look through the pound, we've had a look through the gold, and let's see what's going on with the euro dollar, because again, this is another targeted trade for us. We've seen the pullback like we've seen in the gold market, and now we're looking for opportunities to determine what's happening next with this trade, and that's what's going to be quite interesting for us. Sorry, just bear with me a second. So what we're seeing is today's trading is so far inside yesterday's highs and lows. Okay, there we go. Excuse me. Just accidentally turned off our squawk, so sorry, let me turn it back on. Okay, so the euro dollar is still trading inside yesterday's highs and lows, so there's nothing really to do with this trade. We're only interested in selling this market if we get a break to the downside below yesterday's low. To the upside, we would prefer to just wait. We have the 50 period moving average up here. There's a lot of resistance in and around this type of zone. So if we don't get an opportunity to sell this market below the 120.107, we very well may get an opportunity to actually get in slightly higher, 121.50, something like that. So we can just monitor the euro dollar. This is also one of the trades that we're going to be looking at in this trading session. And then finally the S&P, let's see what's been going on. So we had a major, so this is now a new all-time high in this market. So we've got the 39.36 level, and let me monitor the low. And this is a good example of the type of volatility that you can experience. 39.36 down to the 38.86. So you can see in the course of perhaps an hour and a half, we've seen some significant volatility to the downside. And then you get the correction trade and you get a form of a V-shaped recovery. Okay, it's kind of extended a little bit. But we're still looking quite bullish. So really what that says to us is that we still want to be looking to buy the dips. And that mentality has, or should I say, that directional bias has kind of shifted with us. In the Christmas, going into early January, there was a lot of fundamental and sentiment to suggest that actually these markets could roll over. They are in all-time high bullish territory. So we are in that type of bubble. You're probably hearing an awful lot about it in the media, but really the underlying fundamentals are still very supportive of prices to push higher. So we kind of have to weigh it up just a little bit. Yeah. So with that in mind, we've got the S&P 500, attempting to to break above this level of support with prices above it, and now it's resisting prices from actually closing above it. But we're very, very close to all-time highs, so it's just worth keeping a short-term eye on that. It's not a trade that we planned to get into last night. So just to confirm, some of the dollar trades are still in play. They're just really not they're not moving just yet, so it looks like a little bit of patience is going to be required. And the pound, again, it's in a similar situation really. It's softening for now, but we do expect that price action to turn in the not too distant future. Of course, as always, guys, if there's any questions, feel free to post them into the chat box. Happy to answer any questions that you might have. So let's put up our trade plan then. So we're going to be looking at it's really the idea behind last night's live trade room is that we are looking for some dollar strength to creep back in, but only on a short-term basis. Long-term, actually, we anticipate further selling or further weakness. The dollar yen is the next one. So let's bring this up. So we'll have the markets that we're looking very carefully at, currently up on our screen. The trigger point for the dollar yen to the upside is actually above yesterday's high. So we're looking at this market above the 104.85. We're probably about 12-13 pips away from that breakout trade, and we'd look to capitalize and see if we can get prices pushing up to let me put the level in here, the 105.75. So potentially a nice 100 pip move, maybe 90 pip move in that, if these prices can break above the 104.85. And what we've needed more recently is for these markets to actually break out but then follow through, and sometimes we get the breakout, sometimes we don't get the follow through. So it's we want to try and be as consistent as we can and look to stack the odds in our favor as best we can. Okay, so the next one is the dollar Swiss. So just put this up here into the middle of the screen. So this is a pullback off the high. We're getting some indecision down at these levels, so we want to see if we start seeing some buying coming in. And really the 89.29, I think the 89.29 was our level from last night. And as you can see, there's very little volatility in this trade. Nothing is really happening, so we can just monitor it really on the daily time frames. And last but not least is the Aussie dollar. So for this, we were actually looking for these prices to reverse somewhat. So we were looking at this high in here, and we did want to see this market again break through the 77.16. It's the 77.17 level actually, and we want it to not just break through but to follow through to the downside, and we failed to see the follow through. So again, something we've been experiencing quite a lot of recently, but we've had to back off from the trade when we're just about to look to get into it. And the reason why that's quite useful is obviously we've saved ourselves a trade that is effectively reversing. So it is your trading decisions is a form of risk management in itself. If you're erratic and all over the place, then you'll be throwing good money after bad, and perhaps chasing your losses, getting yourself into a very difficult situation. If you can look to remain as consistent as you can in your trading decisions and really look to manage that risk effectively, and you can be consistent in those decisions, then you can save yourself a certain amount of difficulties with that trade. So the Aussie dollar is the fourth trade, and the fifth trade is the gold. So I will move this FTSE trade, but it is important to note that we've just been moving sideways for 2 weeks. Basically, we've been drifting sideways. So we are interested in this market above the 65.77. Clearly not just yet. So what I'll do is I'll put the the Aussie dollar, just in here, and we've got the gold market as well. So the gold is actually a sell trade below the, so that's, we're looking for this market to actually sell off below that level. So this is our trade plan for the session. We'll keep an eye out. We'll keep an eye on the S&P 500 as well. So what I'm going to do is I'm just going to put a little note in each market, just to clarify, and I assume, I'm sure, you know, some of you might be coming and going, and you'd want to sort of get a bit of an update. So let me put that in there. So we're looking to sell the euro dollar, despite, you know, what you hear in the press and stuff like that about, you know, the fact that it's game over for the dollar and it's this, that, and the other. We're actually looking to position ourselves in the complete opposite direction, and we're looking at the, so it's below the 121.07 is when we get very, very interested in this trade, as it's let me get this level out the way. I'm not sure where the best place to put it, but we'll stick it in here for now. So we're looking to sell below the 21.07. That's what we want to see happen, and that's how we're looking to position ourselves in these trades. So what do we want to see happen for the dollar yen? We're looking to buy it above yesterday's high. So we're looking to buy above, it's the 104.85. 104.85. And because we're looking to buy it and not sell it, we'll just change the color. So okay, so let me put this. So those are the precise levels at which we will start getting interested in these opportunities. The dollar Swiss, actually looking to buy, and we can probably leave these on the daily time frames now. So it's often a case of when prices get close to trigger prices, we'll obviously zoom in and we'll look to really narrow down our focus, and we'll look to make decisions depending on the time frame that is most suitable to the trade. And sometimes that can be a 5-minute chart, sometimes it can be a 15-minute chart, or even an hourly chart. So we can make those decisions accordingly. It's multi-time frame analysis, and a lot of these decisions actually come from even higher time frames, like your weekly and your monthly highs and lows and things like that. So it's a constant sort of evolution of developing trade ideas and then looking to execute them when you're obviously in front of your trading screen. Okay, so what we have is we've got this low just sitting in here, and we're looking to, I'll just put a little text note in here. Just want to see the high. So we're looking to buy above the 89.29, and it can be a nice green color. So, and these prices, they represent daily highs, daily lows. They're objective. They're not just levels that I'm just picking out of the air. They're actually, we can assign those levels to very specific points in the market. They're the first sort of line of support and resistance that we often come across, and when you see multiple daily lows like in the gold market, it adds even more significance to the trade. So let's look at that on the daily time frame, and I'll try to explain what I mean. So now we've got two daily lows sitting at the 1833, and don't forget, when you trade a financial market, all it is a battleground between buyers and sellers. It's far more complicated than that, of course, with layers of sort of fundamentals and sentiment and technical analysis and things like that. A lot of traders can get really caught up in the amount and the volume of information they'll have to sort of try to compute in their brain to be able to make decisions. Actually, it can be quite straightforward. If it is a battleground between buyers and sellers, all you really need to do as a trader is to pick the right side, to be on the buying side or be on the selling side. If you can simplify it in that way, and you've got the technicals, it will really help. If you've got because when we talk about trading an awful lot, what we try to do is analyze the fundamentals. That's your data points and your big sort of macro events. We try to assess the sentiment in these markets. A lot of positivity across your media outlets, and then the technicals, which is what we do every day. And what we want to be able to comfortably say is that, let's take stock markets, for example. The fundamentals are really quite strong with the US indices. The sentiment, there's a lot of, you could argue it's 50-50 depending on where you get your news from. But broadly speaking, there is, let's say, a mildly supportive sentiment for the US indice markets. We have these central banks underpinning the downside, and it's all really important stuff. And the technicals, when you get markets that are creating a series of higher highs and higher lows, which is what we're seeing in the indice markets, then you generally have a bit of a bullish trend to the upside. So when you do your analysis, what we want to end up with is a clearly defined opportunity. Now the actual entries and the exits can be a little bit more challenging, and that's the difficulty, especially recently over the last number of months. So do bear that in mind. But what we want to be left with is a very firm decision that we're looking for opportunities to buy. And so I'll just put the end result is buy US indices. So if we know that which markets we're going to be looking at, US indices, and we've done our analysis, and we end up with a buy trade idea or confirmation that we're looking for buying opportunities, then we can discount selling, we can discount doing nothing, we can actually be a lot more active, and that's the kind of process. But sometimes it's quite difficult, where you could get positive fundamentals, really negative sentiment, and potentially mildly negative technicals. So really, in situations like that, what do you do? Often we probably will sit in our hands. That would probably be what we would prefer to do. We don't want to be clicking buttons during times like that, because you don't know whether the fundamentals will win out or whether the technicals will win out. We always prefer to edge towards the technicals, because you can get negative news, positive price action, or the opposite, positive news, negative price action. So we are technical traders, so we will look to err on the side of caution. If it's a toss up between technicals and fundamentals, we'd probably want to see what the commitment of others are. Where is the money going, and if so, then try to track it and follow it if we possibly can. Okay, so we'll have the market open now at 1 o'clock, so in about 5-6 minutes time. So that's just sorry, I do digress just a little bit, but we are looking for this market to break below the 1833, and not really interested in selling it if prices are above that level. Let me see what level this. Okay, it relates to that particular level. Okay. The Aussie dollar looks like it's very, very close to breaking this high. And again, like how we can get prices defended at daily lows, we can also get prices defended at daily highs. So we failed to get that follow-through trade to the downside as far as the Aussie dollar is concerned. The euro dollar, we're looking for that sell trade below the 2107. We're 23 pips away from these prices rolling lower. The buy trade, the 104.85, we're only 12, 13 pips away from that breakout trade. So these are very, very small amounts for markets which are that trade such massive volumes like these foreign exchange markets trade. The gold market, we're probably about $8 away from that little price rolling lower, which is, again, it's not very much for the gold market. We'll watch the Aussie dollar. So what I want to put in here is a little note so that you can track this particular trade. So we are looking to sell below the 80.33. And the Aussie dollar next. Okay, so many jurisdictions now are talking about that reopening phase in the US and in Germany. They're talking about opening schools and trying to. They're strangely selective about the certain industries that can open. I don't think there's much evidence to support what they're doing, but you would hope that would be the case. Sorry, let me just change this to just to indicate that we're looking for sell trade. So we're looking for a sell trade in the euro dollar. We're looking for a sell trade in gold. We're also looking for a sell trade in the Aussie dollar. Doesn't look like we're going to get near that sell trade. So we're looking to sell below 77.16. Okay, I'll just put it down here at the bottom of the screen. So we're looking to sell below the 77.16, which is yesterday's daily low. And we're not really looking to do anything with the S&P 500. We're just going to monitor it and just see how it reacts really to yesterday's move, where we start seeing a double top here and a little bit more rollover price action to the downside. You see, these market valuations are such an extreme level that you could easily get a 5-10% softening in these markets very, very quickly. We saw in an hour and a half, we saw a very significant move to the downside yesterday. So the Aussie dollar looks like it's going to extend its move to the upside. So we'll see if we get the same move in the euro dollar. So for now, it's if we're talking about the dollar strength trade, it sounds like that's not the viable opportunity as things currently stands. So that's the process we go through, and some days we do experience sort of market conditions like these, and other days, we can get multiple buying opportunities or selling opportunities. We can get them off one after the other. So we have to trade the market conditions that we're experiencing. There's no other alternative really. So if any of you guys have any markets that you're taking an interest in or you're looking to trade, happy to analyze, have a look at those. We can do a bit of sort of real-time analysis on those trades, and we'll see how we get on. Just feel free to use your chat box if you wish. So let's have a quick look at some of the news events for the day. So we'll bring over just Forex Factory really to have a look at today, Thursday 11th of February. So it's a bank holiday in Japan and China, and it'll be a bank holiday in the Chinese market for the next 4 or 5 days, if I'm not mistaken. Let me see when this observance of the spring. So let me see when this Chinese. Okay, so it actually finishes next Wednesday, the 17th. So Chinese banks will be closed in observance of the Spring Festival in China. So it's probably close to a week long, 6 days or something like that. So it'll just impact really the Asian markets to a certain degree. You won't have that volume of clients and institutions and retail traders, putting capital into those markets. So that's why it's generally a little bit on the quieter side. What else is there to focus on? Well, we've got unemployment claims coming out at 130. Not likely to be an earth-shattering event. You can see that it's sort of a medium risk event. Markets have been, this particular number has been fairly consistent now, give or take a few thousand for a good few months. So we'd expect some figure in and around the 755,000 in terms of number of unemployment claims. If there's a strong deviation to the upside, then of course we'll be looking to get into this and see if it impacts the dollar positively. It might support our trade idea for a bit of dollar strength if we get 850 or something. It's an unemployment claim, isn't it? So really you want the number to be much less than advertised. So if it was 650, for example, we might see a nice uptick in the dollar. If it's 850, it might put a bit more pressure on the US dollar. So we'll have to wait and see. Not really an awful lot else to have to work with over the course of the trading day. It's worth just noting we had a very significant negative figure in crude oil in the inventory number yesterday, which is, you would be looking to see how supportive that is of price. So if we take that information over, let me just move this along just one, and we look at yesterday's sort of price action at that point. Nothing has really happened. We've had a bit of short-term sort of volatility to the upside, and then it's just sort of gently rolled over. So the softening seems to be a little bit more around the fact that this market has moved to the extent that it has for quite some time, but now it's just sort of drifting sideways up at these highs, and what we want to see is this market obviously break above the 58.80 level, maybe put our stop loss in somewhere around the 57.80 level. OPEC is saying all the right things as far as supply restrictions and things like that. So there is the potential really for the oil price to continue its move to the upside. So we just want to clear this consolidation, see if prices can firstly break out above the 58.80 and then stay above that level. If that's the case, we'll be looking to get into that trade to the upside. However, we just want to be mindful of the fact that this trade could end up rolling over to the downside once more. This is on an hourly time frame. So just a bit of hesitation, a bit of indecision up at these levels. Not surprising after a $4, $5, $6 move to the upside over the last week or so. So a really good trade to the upside. Finbar, just looking at your message. Yeah, the Dow Jones. So the just to touch upon a bit of the analysis on the S&P 500. So we had a pretty significant bit of selling creep in yesterday's trading. Overall, sort of bearishly, it's basically a long-legged bearish spinning top, isn't it? For those of you that are familiar with your technical analysis. And really, we want to see prices break above or break below. We're currently trading within it. So we can carry that analysis. It's the same thing for the NASDAQ and slightly more bullish outlook, but very much the same in the Dow Jones. So really, Finbar, I don't know what you're looking to do with it. Are you looking to buy or sell it? We would be advocates of this price pushing higher above the 31,552. We'd want to see further. We'd want to see these prices really rolling over to the downside below the 31,213 for us to get into the downside. But the 31,552 to the upside is a viable buy trade at that price. So so that's the Dow Jones. Nothing really going on. We are very much I've got Siri talking to me now. Okay, so the DAX is just pushing to the upside. The Nikkei is threatening to push higher. So they're all in sort of a similar situation in terms of getting close to sort of making new highs or to breaking important levels of resistance. So really there is a buy trade. Generally speaking, we wouldn't like to get in below the high just purely because it's likely to provide a little bit of resistance. So we want to see, again, as always, prices break above and continue its move higher, and those have been sort of few and far between recently. Yeah. So I'll just bring these back up on screen. Yeah, sorry, it's the gold one I was missing. I think it was the S&P, wasn't it? If I'm not mistaken. Yeah, so just to see what's happening with this. Okay, so so now we've seen the Aussie dollar actually break above, make new highs. and look like it's continuing to the upside. So it is continuation of this initial pullback phase. So we might get prices pushing to the upside. There's a lot of resistance potentially up at these marginally higher levels, so it doesn't really stack up from a high probability trading perspective, although it might be a little bit of a winner to the upside. The dollar Swiss trade is looks like it could roll over, so clearly the dollar strength trade is not an option just yet. The reality is about a trade like this is that if it does end up selling off, it's likely to sell off at a much higher price than these current prices. So that's worth taking that into account when we trade. We might still get a move in the dollar yen. That might be the first market to move. So that's our understanding of these markets at the moment, is that they're just they're continuing its pullback phase, and these for us sort of historically are not fantastic high probability trades. They're a little bit more challenging. So hopefully it's quite clear in terms of what our trade plan is. It is looking for that dollar strength trade, and that is clearly not on the cards just yet. So as always, we're quite comfortable to be. We don't need to be active all the time. We want to ease ourselves into trades on occasion, and when the markets don't perform as per expectation, we want to just be a little bit patient. The three pillars we talk about every single day is our ability to be consistent in our trading decision-making skills. We want to be disciplined with our capital, make sure that we understand how much capital we're committing to each and every trade. That's very important. And then thirdly, patience. And that's really what we're going to practice now. We're going to practice that sort of the fact that the markets aren't performing as per our expectations. They're actually going in completely the opposite direction, which is fine. It's allowed to do whatever it wants to do, and we want to reassess the opportunities and come back again next time round. So not the most eventful trading days so far. I mean, as a result, it's looking like we probably won't get those structural failures now for perhaps a number of hours. That's often the case. We're not too far away. We're only sort of 20 pips away from a trade in the dollar yen. We're still, as things stand, 30 odd pips away from actually breaking to the upside in the dollar Swiss. 30-40 pips breaking lower in the euro dollar, and sort of $10 away from breaking lower. So these trades might occur. We can discount the Aussie dollar now for sure, and we do have some strength coming into the S&P. So a lot of the conditions so far are not that supportive of our trade idea, but if the trade idea filters through, then we'd be looking to be quite active with the trade. Okay, so I'll leave those up on screen for just a moment. We might pack up there, guys, if that's okay. If there's any questions, feel free to post them. If not, you can take note of these levels if you wish, of course. If you're looking for those high probability trading opportunities rather than the fact that every market is kind of moving, like the Aussie dollar is just pushing higher right now. So there's a lot of traders that will look for that buy trade. We want to kind of plan our trades and then trade our plan. And if we find that the market conditions are not suitable for our trade plan, then of course we'll back off, and we don't really need to force the issue. So we'll see how these markets play out over the course of the afternoon. We shall engage through our signal service if we do decide to get into a trade. If not, we can be quite patient. We can then look to plan those webinars again. Plan those trading opportunities again tonight in our Trade Plan Live webinar through the live trade room. So on that note, we shall wrap it up there, I guess. Don't see any questions coming through, which is absolutely fine. Clearly, a little bit of patience required today. So if you do want more information, please go to our website, www.thelivetraderoom.com, all one word, and you can contact us through the website there if you need. Please do feel free to subscribe to our channel. Try and support us if you can. Give us a thumbs up, click the bell, and you'll be notified when we go live. And we're just here to help during the trading day. There is a lot of people obviously coming into this environment, and an awful lot of people not really understanding what they're doing in any way, shape or form. So they are really, when they trade markets, they're pretty much guessing. They might be going on the news or something like that and just looking to throw capital into these markets. We believe it's important to take a bit more of a considered view, bit more of a build up your knowledge and understanding of these markets. Don't chase the dumb money. It might bring you short-term rewards in terms of going with the crowd. Generally speaking, it's not the best place to be in our experience. So learning how to make independent decisions for yourself based on your own analysis and your own understanding and what price is doing, and integrating some of the fundamentals and the sentiment behind these markets is by far a more appropriate approach really for these markets. So my pleasure. Thanks, Philip. Good to have you with us. Hope you can join us again. Like I say, give us a thumbs up if you can, and do subscribe to our channel, and we'll notify you as soon as we go live. We're going live every day now for the next few weeks with this lockdown situation. We're not going live on Fridays, unfortunately, but that will change. As we start to come out of this lockdown situation. So that's the plan. Monday to Thursday. Do feel free to join us at 12 o'clock noon. We'll do all our understanding. We'll review previous days price action. We'll review the news. We'll look for trading opportunities, and hopefully on other trading days we'll be able to trade them actively. Except today has been a day of price action moving in the opposite direction to what we planned. So we're comfortable just sitting our hands, not getting too anxious about these markets right now, and that's quite important. And if we can help you with that, then that's exactly what we'd like to do. So on that note, guys, I shall certainly leave our screen just up for a little bit longer, and then we shall end the broadcast, and we'll see you all again next week, we hope. And again, for more information about what we offer and how we help and support traders, just go to our website, www.thelivetraderoom.com. So from everyone here, thanks for joining us. Do take care, and we'll speak to you soon. Bye for now.